Good morning, everybody. Happy Tuesday, January 19th. We appreciate you joining us for today's Dominion Payroll webinar. Today, we're going to be taking a look at the second round of stimulus coming to us through the Consolidated Appropriations Act. A not very excitingly titled act, but one that does have quite a few dollar bills for small businesses involved. My name is Kevin Wilson, and I am joined today by my colleagues Angie Trapp and Tracy Clark. Before we jump into the content today, just a couple housekeeping items. If this is your first time joining us, we do ask that any questions that you have, put those through the Q&A function that you see at the bottom of your screen. We ask that you avoid the chat. The reason for this is that we record these and host them on our website so that folks can come back and review them later on. And the chat disappears into the ether at the end of the program, and the chat is, or I'm sorry, the Q&A rather, we're able to preserve that. So on that topic, feel free to drop your questions in there, and we will do our best to get you answers throughout the course of the program. If not, we will do a Q&A session at the end of the program. As always, you can go to dominionpayroll.com, hit that COVID-19 resource button at the top of the page, and there you'll be able to view past recordings of our webinars. You can see our upcoming schedule of webinars. And additionally, we have a lot of forms and resources to help you navigate these challenging times. And then last but certainly not least, we are always here for you through the email address questions@dominionpayroll.com. We'll do our best to get answers to you in a very timely manner there. So pressing questions that wake you up in the middle of the night, just head on over to questions@dominionpayroll.com, and we will do our best to get you the latest and greatest and most accurate information right to you. So after this long weekend, we're going to jump into the second stimulus update, and I am going to pass the mic to Tracy Clark. Tracy, I hope you had a nice long weekend.
I did. How about yourself?
It was pretty good, you know. Weather cooperated. Had a nice fire in the backyard yesterday, so I'm feeling
nice.
relaxed.
Very nice. Very nice. All right. So we're going to kind of jump right into this, the new PPP Loans and Rules. So the SBA opened the PPP lender portal for all lenders today. So if you were waiting for that, that is open. I did see one client hit me up this morning and said that their bank was actually giving out, like, I guess, times that they could go in to submit their loans, and they weren't scheduled until tomorrow. But it is open by the SBA. So now it's all on your lender. If you are interested in a PPP first draw, you're going to use the application form 2483, and all the previous PPP rules apply. What were those? In a nutshell, they basically said you had to have employees under 500 people, and you had to attest that you needed the money, but there weren't any really other guidelines other than that. And you were able to get a loan up to $10 million. It was 2.5 your monthly payroll. For PPP Second Draw, you're going to use form 2483-SD for second draw. So if you wanted to look at it, it's not very much different from the first draw, but that is the second draw. And on there, you're going to see that if you are a business with an NAIC number that starts with 72, you can do 3 times your monthly payroll. Otherwise, it's going to be 2.5 times. So generally, they say that the loans are going to be roughly the same amount. This time, though, you have to have 300 or fewer employees. You do have to have a gross receipt decline of 25% over a prior year period. So normally what they're doing is they're looking at a period in 2020 compared to 2019. So just any one period, if you had a reduction of 25%, you can apply. And then they want the first draw funds to have been used or likely to be used before the disbursement date of the second draw. borrowers are able to apply for that second draw and presumably the first draw until 3/31/2021. So you have a little less than, well, you have February and March, so you have about 2.5 months. Okay, the expanded PPP covered costs. So they actually included a few more things in the eligible expenses category. And that includes any software or cloud computing services, employer personal protection equipment and similar costs, purchases of essential business goods and supplies on contracts entered in before the start of the PPP covered period, and any property damage occurred due to public disturbances that are not otherwise covered by insurance. I should have said too, that any software or cloud computing services. So if you have somebody who does your payroll like us, our services are now covered under the new expansion. That is effective back to the original CARES Act. But if you already got your loan forgiven, you can't go back and amend that. Okay, so there were simplified loan and forgiveness for loans that were under 150,000. So remember back, they already put out an application for loans that were under 50,000. So that was the 3508-S. And that was a super easy application for those loans to be forgiven. Now they have one for the 150,000 or less, although I didn't see the application for forgiveness out there just yet. So you can always use the easy form or the long form. You can always use that anyway. You don't actually have to use the shortened version. And if you have a payroll company that's running all your reports, really all the work is already done for you. So it's not a super big deal if, no matter what forgiveness application you apply for. But for loans, the SBA said that if you're seeking $150,000 or less, you don't have to provide the documentation for the revenue loss. You will, though, when you apply for forgiveness. However, having said that, and now I've looked at several banks. I've had several people send me things that their banks are asking them for. It doesn't seem like the bank is making any concessions for people who are looking for loans under 150,000. I'm sure it's just easier for them just to ask for all the same thing. So just be prepared to provide documentation for that reduction in revenue to your bank. Just it didn't look like like I said, they were making any concession for that. I did see that they were also asking for the federal tax forms for the 941 for each quarter in the year that you select. Now, remember, you get to select either 2020 or 2021 for your payroll costs. So for most people, that's going to be, 2020 and 2019. Most people are going to select their 2019 because they had their greatest payroll cost in that year. You can also choose any 12 months that are trailing, but obviously, if you do the trailing 12 months from right now, that's going to be 2020. They are asking for evidence of retirement and health care, and that would come from your carrier. So just go ahead and try to get all that together for the year that you're asking to have the payroll cost determined for the monthly. And then one person did ask me for a payroll statement that covered the pay period for February 15th, 2020, and that was so that their bank could establish that they were in existence as of 2/15/2020. So if you need something like that, you can go out and use a payroll summary from our portal. You can do that way. That was pretty much all I've seen so far on what people are asking for. Let's see. So the number of employees that they retained as a result of the loan, an estimate of how much the loan was spent on payroll costs, and then proof of qualifying revenue loss if not already provided by the lender. Those are the things that you're going to need for the forgiveness. Okay. I get a lot of questions on the ERC. So I know there's a lot written here, and been on these calls before, you know this is pretty much the same thing that we showed the last 2 weeks. But it's really important that we get the word out about ERC, which is the Employee Retention Credit. This is a program that began on 3/12 of 2020, and it actually has been extended, but it's changed so much, I've kind of broken it down. So this one that I'm going to talk about now is the ERC Retro, which is for the tax year of 2020. And I'm going to go over the rules for this. And the reason that it's important to bring this up is because prior to December 27th, people who had received a PPP loan could not be enrolled in the program, the ERC program. So as of the 27th, they took that away and they said, okay, people who had a PPP loan are eligible for ERC. So in 2020, they have some rules around that. And the way it worked was this: the maximum eligible wages per employee are $10,000 for the entire time. So between March 12th and December 31st, if you paid your employees $10,000 or more, that would be the maximum amount that could be applied to this program. And you're going to get basically 50% of those wages back. So for every $10,000 per employee, you get $5,000 back per employee. Now, to qualify for that credit, you have to meet some criteria. One was that you had to be in business during the calendar year of 2020. And that the important thing about that is this: if you were a brand new business, but you were shut down for part of the time, you can still qualify for this credit. So if you started in 2020, you had to be shut down. Say you were a restaurant, you didn't, I feel for you if you opened like in February or March, those wages would be applicable to the ERC program. So let me just go over that a little bit more. Employers must have carried on a trade or business during the calendar year 2020. And the operation of that trade or business. Now there's 2 ways to qualify. You don't have to have both, just one of the 2 ways. You were either fully or partially suspended due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings due to COVID-19. Who does that apply to? Well, that would apply to restaurants and gyms, hair salons, nail salons, doctor's offices, dentists, dental offices, anybody who was under that governmental authority, those mandates that were sent out that told you that you had to be fully or partially shut down due to COVID-19. If that doesn't apply to you, you may still qualify for ERC if you had gross receipts for at least 1 calendar quarter that are less than 50% of the gross receipts received during the same calendar quarter in the prior year. So in second quarter, if you were down 50% over 2019, that qualifies you for this program. Now, that period of the significant decline in gross receipts is recognized until the end of 2020, or that your gross receipts are greater than 80% of the gross receipts of the corresponding calendar quarters in 2019. So if you qualified in second quarter and then third quarter, maybe your receipts were at 75%, you're still qualified. And then in fourth quarter, maybe, you know, you got up to 85%. That would be the point where you would no longer qualify for the program. In addition, for employers with over, I should have said this at the beginning, you had to be an employer of under 100 full-time employees to qualify for those 50% in wages for all wages. Now, if you had over 100 full-time employees, ERC is still available, but it will only be on the wages paid to those employees for not working, paid furloughs. That's what you want to think about in that situation. For employers with 100 or fewer full-time employees, the credit is available on all the employee wages. And that also, I should have said, that also applies to group healthcare costs. So for instance, we had a client who had over 100 full-time employees. They did not pay for a paid furlough, but they did pay for their employees' group healthcare costs, and those healthcare costs qualified under the ERC program. So it's a little convoluted. but it's worth investigating to see if you qualify for this. Certainly, if you're a business that had to be fully or partially, shut down due to a mandate, you would definitely qualify. Then you would just want to see, hey, do I have over 100? Do I have under 100? And how much can I get for this credit? To get these, to enroll in this, basically what you're going to do is you're going to send in a request to questions@dominionpayroll.com, and we're going to get back to you. This is not something that you apply for with the government. It actually will come through us. We'll be doing amended 941s for the year of 2020. And we're just going to have to get a little more information from you if you think you actually qualify for this program. All right, I know that was quite a mouthful, and it goes on. The story goes on, doesn't end there. And I just told you that PPP and ERC recipients are eligible. The only thing I should say too is that ERC and PPP loan forgiveness cannot be claimed on the same wages. So you may have started your shutdown in March, and that made you eligible for the ERC program until you receive PPP funds, and then there'll be a gap in your eligibility, and then you'll start it back up when you're done with PPP funds. And we can talk about that further if you have more questions on that. Okay, so come 1/1/2021, ERC has actually been expanded, and they changed it. So now, instead of having to have a gross receipts decline of 50% for a corresponding quarter, you'd only have to have 20%. So they're going to look at, you're going to look at 2020, or you can look at 2021, but it's all compared to 2019. And then you can look at the fact that the increased ERC wage limit went to 10,000 per employee per quarter. Now in 2020, it was for the entire year. It went from March 12th all the way to the end of December for 2020. In 2021, it is 10,000 per quarter, and they've extended this through June. So it's going to be the first and second quarter that wages will be eligible. They increased the ERC percentage from 50% to 70% of gross wages. So before, you were getting back 50% of that $10,000 or a max of 5,000 per employee. Now you're going to get 7,000 for every 10,000, and that's going to be per quarter. They increased the large employer of full-time employees limit from 100 to 500. So now if you're an employer of 500 or less, all wages can be applied to the ERC program, granted that you have to meet all the other criteria. New employers who were not in existence for all or part of 2019 can use the comparable 2020 calendar quarter to determine the extent of decline in gross receipts. So that's those two programs kind of in a nutshell. They are lifesavers for a lot of people. They're going to be a good way of helping restaurants and gyms and stuff stay in business. So if you think this is something that applies to you, please reach out to your CPA, or you can reach out to us and try to get you more information for your specific situation. But your CPA should be very well versed on this and should be able to give you more information. Okay, the EIDL advance no longer reduces your PPP loan forgiveness. So if you were one of those lucky few that got the $10,000 EIDL advance, or you got some portion of that $10,000 per employer, it was up to $1,000 per employee, then you no longer have to reduce your forgiveness amount by that. So that was really nice. And that's also been replenished. However, they do have some new caveats on that, like they do on the PPP funds. So go ahead and check that out if you did not receive a EIDL advance last time. FFCRA has been extended. So most people were aware that the FFCRA stands for the Families First Coronavirus Response Act. And it was a program set up to give employees 80 hours of sick leave. And it applied from the from the standpoint of April 1st through the end of December. And they had 6 qualifying reasons that employees could use those 80 hours. The first 3 were available at 100%, and the second 3 were at 2/3. It's something that was mandated. You had to offer it to employees unless you were an employer. No, it was offered to all employees. If you were under 50, you could not have to offer the expanded FMLA, but the sick leave was a requirement. The expanded FMLA is FMLA to stay home with a child whose school or place of care has been closed due to COVID-19. So that was the only qualifying reason for being able to use the FMLA. You couldn't use it to stay home with a sick loved one or to care for people. It was only for if a child's school or place of care was closed due to COVID-19. Now, the 80 hours could be used for someone who is sick that you're caring for. It got expanded in this way. So as of 1/1/2021, it's no longer a mandate. It's now voluntary. However, the credits are the same. So if you offer the additional hours that maybe your employee may have to be used until March 31st, you still get the same tax credits. It didn't refill the bucket. So if you had an employee that used 40 hours in 2020, they have 40 hours left to use this first quarter. They don't get replenished to that 80 hours. So everyone was given 80 hours at the beginning, but now you have to take away what they've already used. So if they already used all their 80 hours in 2020, then they have no hours to bring forward into 2021. So that is the FFCRA expansion. And that's all I have. I know that was kind of short and sweet, but I kind of just wanted to focus on the 3 things that are at the forefront of what's going on.
Well, you've got some follow-up questions. Okay, so Tom asked, prior periods are calendar quarters of 2020 versus same quarter in 2019, right?
Right. So first, second, third, fourth quarter of 2020 as compared to 2019.
And then Jane said, if your covered revenue losses earlier, can you go over again? Can it be revenue loss 2021 versus 2019?
So the problem with the revenue loss in 2021 is we haven't gotten through an entire quarter. So there's no way you can compare 2021 to 2019. So it's going to be 2020 as compared to 2019.
And then our friend Mike asked, is the PPP loan amount counted as part of the revenue in the quarter in which you are trying to claim 50% or 25% reduction in revenue and loss in revenue?
Absolutely not.
Year over year. Okay.
It does not count.
Okay. And then Tom asked, is EIDL advanced forgiveness retroactive? We already forgiven for the PPP, but told at the time we needed to pay back the EIDL advance.
I think it is retroactive. I've not seen anything to the contrary on that. So I would reach out to your lender, but that is my understanding, that you no longer have to pay that back.
Okay, and then Jeannie asked, can you clarify the max of 5,000 or is it 5,000 per 10,000? For example, if someone makes 50,000, can you claim 25,000?
Okay, so it's 5,000 max. So if you have somebody who makes 50,000, the most you can get back on them is 5,000.
And Tom said, thank you.
You're welcome.
And that is all we have in the queue right now. I wanted to go really quickly over, and I don't know if Kevin, do you have something for tomorrow that you want to talk about?
Well, in all honesty, we are sort of revamping our plans. Our colleague Leslie is feeling a little under the weather, and we may not have exactly the program that we planned for Wednesday. So my afternoon is sort of going to be taking a look at what we can present, but we're trying to figure out a way to give everybody a look ahead rather than a look back at 2020. We're going to take a look at what the incoming administration, how it may impact everything from payroll to the wider economy, and some regulations that we may likely see in the coming months. So sort of an inauguration day special. You can register for that at dominionpayroll.com. Little wrench in the works right now in terms of exactly what we're going to present, but we will have something for you tomorrow.
Awesome. And then on Thursday, we have onboarding. So we're going to go over the electronic onboarding portion of our system, show how you can collect new employees' data through the system without having to get actual paperwork. So that is awesome. And we had a couple more questions come in. Can get a second PPP loan based on the same quarter that you requested help for the first PPP loan using the same numbers.
Yes. Yes.
Yeah, as long as that 25% loss in revenue is represented there, it shouldn't be a problem.
Then Paul said, it sounds like Dominion provide great support for ERC retro for 2020. Do you provide similar help with ERC in 2021? Or do we rely on our CPA for 2021?
Nope, we'll be the ones doing 2021 as well. So you just can send in a request to questions@dominionpayroll.com, and we'll be sending some information out and getting you all set up for that.
Okay, well, that is all of the questions in the queue. So unless anybody has anything further, we are done for the day. So guys, if we've missed your questions, please send your questions to questions@dominionpayroll.com and we will get back to you. Thanks, everyone. Thank you,
Take care.
Tracy.
You're welcome. All right, see you guys later.
Bye.